Ladies and gentlemen, please take your seats. The show's about to begin. Amjad, let's put on a show.
Let's put on the show.
Welcome to another episode of Golden Nuggets with me, your host, Silvia Eldawi. And today I'm joined by Amjad Mustafa, who is a global technologist and founder of Select Ventures, which has invested in technology startups.
That's right.
I was about to say PropTech startups because PropTech is...
the technology startups in general.
Startups for, you've been in the space for over 30 years, but investing for about 20. And you have a unique blend of experience, both in real estate and technology. So Amjad, could you just share with us your journey as a technologist and a real estate investor?
Yeah, thanks a lot, Silvia. The journey with technology, actually, it started by coincidence, like most of the people in
real estate,
in my generation. When I finished high school, my father told me you have one of two things to do: medicine or engineering. Mm-hmm. And medicine wasn't something really that I was very much interested with all respect to doctors, and engineering was the thing that really attracted me. And at that time, computer engineering was something really new. I was actually in the first batch of computer engineering for the King Fahd Petroleum and Minerals University in Dhahran. And at that time, you have to imagine that at that time, we didn't have internet. The computer engineering kind of thing took me into technology, and I worked in technology companies for over 20 years, implementing and living how technology actually transformed the landscape of everything we do. And that was really fascinating. I was really lucky to be part of that change, which later on took me into the faster pace of technology transformation, which venture capital is very much about. And
you've recently launched Yellowfin Capital.
Yeah, Yellowfin Capital Partners is a venture capital fund. We just incorporated the fund manager. We are still waiting for the license to practice the act of collecting the fund and investing the fund, which is expected to happen very soon. But yes, venture capital, a lot of people do not understand what venture capital, how it really happened.
And I'd like you to actually explain the difference between what Select Ventures is, which is essentially an angel syndicate, and what a VC is.
Select Venture was started as a syndicate of angels together investing in technology companies. We invested and managed investments in 20 to 30 different startups, some of them with great success, some with limited success. I mean, this is the nature of the space. And then we decided to take that to another level by converting this into a proper fund that can invest freely in different startups globally, utilizing the flexibility that a venture capital fund gives to the people who invest in this space. So the venture capital space is basically a very important part of the ecosystem of how the knowledge economy develops. In the past, the capital was only going to certain channels where you could actually touch and feel assets. If you want to build a building, you will be able to raise money to build a building because your investors will understand where their money is going. They will see the land you are buying, they will see the building you are building, and then it is safe. Exactly, they're familiar with it. Information technology and technology was very difficult for them to comprehend until venture capital became the middleware, became the... Say, I'm using technology words, I'm using middlewares.
We'll put the translation next to it.
Exactly. So it became the enabler of this technical. And as soon as the marriage between technology and capital happened, you saw this explosion of technology startups all around the world, and it really changed the way that we do things forever.
So Select Ventures is kind of a bit like what you see on Shark Tank. It's a group of investors, a group of angel investors investing their money. What's the difference with a VC? Where do they get their funds from?
Well, the VCs get their funds from what they call limited partners.
LPs.
Limited partners are different than GPs, or what they call general partners. General partners are the people running the funds, and this is myself and my partners. The limited partners are those who put the funds into the venture capital in order for the fund to operate and invest it in the right places and return the investment return back to the limited partner. So they get their money from limited partners, and they are different types. They could be high net worth individuals, family offices. They could be institutional investors, and there are different types of limited partners, fund of funds, and different things.
And what inspired you to set up Yellowfin? Was there something that you felt was missing?
No, actually, look, the venture capital ecosystem in the region is extremely well developed now. There is a lot of money that went into it. Relatively new, like we're talking about 7 to 10 years maximum, but the space is filled with very professional players who raised very interesting amounts of money and invested in very good companies, and it's quite successful. What we think is missing, and we're trying to fill a gap in, is basically trying to scale these startups into different markets. Mm-hmm. And that is something that I'm very passionate about. It's about taking these successful companies that have been started, that have proven track record, proven idea, proven founder, proven business model, and try to take them to new markets which have much bigger scale in order for the companies to continue their growth. Our region is limited by scale. We are not a huge region. We're not China. We are not India. We are not America. We're not Europe. So it does really create a need for these companies to move from the region into somewhere else. Mm-hmm. And I think that is a role that we have taken on board. We want to become the fund that will globalize as many startups as possible from this region, take them to other places, take them to new markets. We started in Southeast Asia now because the joint venture that I have is with a Singaporean company, and we will be growing these startups into the 800 million Southeast Asian countries, and I hope we will be successful with that once we start.
Because a lot of regional or local startups tend to have their next step as Saudi Arabia, right? So they start in the UAE, next step for growth would be Saudi Arabia. But are you seeing more of a link between UAE and Singapore?
Saudi Arabia and the United Arab Emirates are even like whether cousins. The startup starts here and scales to Saudi Arabia, or it starts in Saudi Arabia and scales to the United Arab Emirates, that happens all the time. Mm. But the opportunity is bigger than that. So they start going to the neighboring countries like Egypt, Jordan, sometimes Turkey, Pakistan, and vice versa. There are companies who start in Jordan or start in Egypt, and they see their next market is in Saudi Arabia and the UAE. But still, the region is relatively small. Mm. And if you want to become $1 billion company, you often need to seek bigger markets to open more channels for yourself, and in order for you to increase your revenues and your profitability. And I think that is what we're trying to do now. Is we've seen a lot of companies at a reasonable size that are trying to move to another market. And this is interesting. There are a number of people doing it, not only us. But the thing that I see in the market is some of the companies try to help the startups to grow in a different market by giving them an office or giving them some funds. What we try to do differently is we try to actually have skin in the game. Mm. So we put money in the new market. We hire a founder and a co-founder, and we joint venture with this company to grow them in a different market while they are continuing to tackle their current market. And we become like an extension, or we become like an office, or they kind of outsource their growth to us in the new market. And that's that's the model that we're trying to do, and we hope we will be successful with it.
And that's quite a unique model, I think.
It is actually, yes, unique, but this is what the world needs today. Like 20, 30 years ago, there is the WTO, the World Trade Organization, was opening the world for all the manufacturing and all the physical assets to go everywhere. So things will be manufactured in China, and then you will use them in the US, or like the other way around in Vietnam and whatever. Today, the information technology and the ideas and the pace of change in technology needs a global force that unifies all these technology companies. I am talking to you today. There will be 2 or 3 startups that popped up last week in this region that I can guarantee you similar startups popped up anywhere else in the world. And these guys need to have integrated business at some point in time. So you will see more people like us trying to globalize, trying to develop business, trying to take startups from one market to another. And it's a wave that I anticipate will just grow over the next 10 to 15 years. PropTech still did not figure out how to disrupt the real estate business. And my thesis around that is the real estate market is extremely large to be disrupted. So the PropTechs and those companies need to slow down and not pretend like they will change the world of real estate. They have to do the first things first. They have to digitize the real estate market first. And like all these listing sites that we all know, they didn't disrupt the market. They actually digitized the way that you search. 15 years ago, if you want to buy a property in Dubai, you will drive your car in the morning, go to a gas station, look for Al Khalij newspaper, pick it up, look at the leaflets inside, and look for your property. That was digitized. You don't need to do that anymore. Now you go to Property Finder or Bayut or Dobizil or any other listing site, and you start looking.
And you wouldn't call that disruptor?
No, that's not disruption at all. That's kind of digitization.
Right.
But there is a lot to be digitized. There is a lot to be done. And I think after this thing is totally digitized, you could probably think about something that may change business models in one way or another.
So what do you think is missing today in PropTech?
The PropTech industry, I would say, I would like to see, I think what's happening today in artificial intelligence will definitely make a big change to the way real estate deals are done. I wouldn't call it disruption. It might disrupt the way that search is done, but definitely artificial intelligence will play a major role in the decision-making process of the buyer and the investor and also the seller. I was pitched a PropTech yesterday, basically, and the guys were showing me some sort of a normal search engine, but it does a little bit more than what is currently available. And one of the keywords he said, this search engine will have all the tools and the configurations that will enable the buyer and the investor to make a decision. And I told him, wrong. That's not really what I want to see today. I was looking for a system that automates the decision-making process rather than give you more configuration to allow you to make a better decision. The humans now need to be assisted in making the decision, not to be given the tools to make a decision. And that's the era we are living in today.
And that's why I think real estate agents will not go anywhere, because it's that hand-holding that's required, and a robot or a bot cannot give that to you. And I know from my own personal experience, the first property I bought, what I said to the real estate agent I was looking for, and the area and the specs that I gave, this is what I want to buy, is not what I ended up buying. And I bet you, if you look at every buyer's journey, the first thing that they told the real estate agent they're looking for is not what they ended up they ended up
definitely
buying.
100%. So the real estate buying, selling, decision making is intensive, and human interaction is not replaceable at the moment. However, I would say the technology still has a lot to do to digitize this process. And there are a lot of people who are trying to do different things. Example, property management, for example. None of the PropTech is capable of cracking this world. One reason is because most of the developers have their property management software, which is, by the way, none of them. I have used most of them being in the real estate business itself. None of them is really capable of answering the people's needs. And so they don't allow the startups and innovators to get in. Let's say I'm a startup. I want to create a property management software that can deal with the people requirements in a very, very good way. I will be hit with those major developers blocking the way because they will force you to use their own property management software. And it's most of the time does not answer does not go up to the satisfaction of the customers and consumers. I would say the fractionalization of real estate and tokenization of real estate is an area that will develop, and it will allow better and easier way to trade real estate and invest in real estate. And that's an area that I think will continue to grow. Reviews, I haven't seen, I don't see a connection between the real estate end user and the real estate company. It's like these properties, like if you go to eat in a restaurant, you will have a chance to talk about the restaurant. You buy something, you live somewhere, and there is an isolation between whatever you ended up buying or living in, and I don't know how. I am like looking for something that will at least improve the whole quality of the real estate ecosystem by giving people a feedback on that property. Imagine these properties are being lived in. Nobody has a chance to say how his experience is looking like.
Can I just say that's a startup idea that I invented a few years ago, but I did nothing.
It didn't go anywhere. Okay,
which is very similar to many PropTech. But not just like, yes, you get reviews on your Uber driver. You get review on every restaurant you go to. You get review on every business on Google Review. Why not have a review on every single rental property? Because
the economy of the property market is so huge that any PropTech kind of startup looks small. Unless it's really trying to make that easier, or it kind of is carried on the back of that huge transaction, anything else is small. And the broker fees are huge. Relatively the price, the whole thing. So who is going to worry now about like the sense of a review that is going to be generated? So it's a little bit really, it's different. Real estate is the largest asset in the world. If you combine all of the stock markets together, if you combine all of the companies, you bring in all of these values together, real estate will still be bigger than that. So we're talking about a huge thing to disrupt and a huge thing to deal with. And I think whoever is starting to look at PropTech needs to look at this from that perspective, needs to give respect to the huge beast that is very difficult to disrupt, and see how he can make the life of the players in that market easier rather than change their roles.
I'm just thinking back to that review side, because originally the one that I invented in my head was actually a review for real estate agents, which would help improve the ecosystem. You know that because you're being reviewed, or that my Uber driver is going to be a little bit nicer to me because he wants the 5-star rating. So I always thought that there would be a huge value for our ecosystem if there was a way to rate and leave your review on real estate agents, and that would really level up the standard of service. But you've got me thinking now about the reviews for actual properties. And I was just, because my mind goes 110 miles an hour sometimes. So I was thinking, if I was searching for a property and I'd see that in the history, this property has been burgled, or it was a haunted house, or whatever it may be, that will block its future.
You have an idea for a startup, so we're expecting a pitch soon now.
I think I'm going to turn this into a deck. I think that could be wonderful. Wouldn't you love to have a review of all the houses that you've... and then you could go back and say, well, actually,
Actually, it will drive quality up. example. Look, I don't know if that will work or not. I have some
So you're not going to invest in it?
I have investment associates who are going to look at that and stop me if I'm getting excited. But yeah, I mean, it will drive the quality up. If someone says this property smells bad, then
in the summer, for example.
Then the owner of that property and it will drive the quality better. It will force somebody to solve the problem, and it's not a bad thing to do. But how do you fit that in a business model that generates money and incentivize people and create something and put it in the middle of these billions of dollars that are running around is really the problem, is really the issue, because you will have so many ideas, but how do we monetize on these ideas? How do we create money? How do we make money at the end of the day on the back of a nice idea? That's really the biggest problem. Data is the biggest thing. Some people think ChatGPT, for example, is something new. The technology is not new. This is something that has been going on in universities for the past 15, 20 years on how to analyze words, how to compare images, how to take text to image, image to text, has been going on for a long time. What a company like OpenAI did and others, and it is recently why this explosion happened, is because they realized the importance of data. When they started bringing so much data and using and running those kind of technologically advanced algorithms and programs on this data and use the data to fuel the intelligence, this became a big thing and it affected all our lives.
And they say that AI is the World Wide Web of the 90s. So when are we going to start feeling taken over by AI? Or when are we going to really feel, I mean, we hear it being mentioned every day, AI, like you said, AI enabled, it's a buzzword, but I'm living life as normal, I would think.
We're still way at the beginning. We are only a couple of years into this artificial intelligence revolution. Where is this going to go next? It's very difficult for me to know and anticipate, but I can tell you that we will feel it a lot. It will come into many things that we do. What we are seeing today is really genius in terms of all these creations that are happening utilizing artificial intelligence. So I expect this wave to continue. I think the venture capital industry needs to play a major role here in the region to make sure that we're not left behind as far as artificial intelligence is concerned. And I'm really worried about it because the governments are aware, and there are very, like we have a Ministry of AI here in the United Arab Emirates, which is run by an incredible minister and very intelligent people. But then the academics and the universities and the people the software engineers who are inventing these things need to be actively working here. And I would say that the United Arab Emirates can be the sandbox of artificial intelligence innovations worldwide. Because we have been, by the way, in the region, we have been incredible in utilizing technology. We haven't been inventing, but we have been the first to utilize technology and those inventions to the benefit of the people. I mean, you travel anywhere in the world, you always feel that your banking mobile application here is better than many other countries. But we did not invent the internet, and we did not invent the mobile phones. You come through the Dubai airport, it's one of the most advanced border systems in the world. We did invent some technology here in the UAE, and I am aware of that, but most of these inventions happened elsewhere. So I would say probably today we need to play more on that role, where we try to accelerate most of the artificial intelligence solutions that are happening elsewhere and make Dubai, make the United Arab Emirates, or the region, even Saudi Arabia is doing a great job in some of the new developments that are happening now. Make them sandboxes where these these technologies can be put to use, and that will also add value to the well-being of the life of the people here.
So what would you say is your approach to identifying high potential startups?
Well, most of the venture capitals depend on a very good deal flow, output, where they have access to a lot of innovation and startup ideas, and they attend conferences and they have participations and fellow venture capitals and pitches from different places. So we do take that, and then we funnel it. We have investment associates and analysts who are very good in funneling these things and looking at them and understanding whether they fit our mandate or not, they are at the right stage or not. And by the time we get to talk to someone, I personally do it this way. I look at three things. I look at the founder, I look at the idea, and I look at the price, or I would say the deal. I normally like to work with a startup that has more than one founder. Some of the venture capitals don't mind a solo founder. I would love to see a team. I feel that an idea needs to be carried by a number of talents, and there need to be those people aligned.
And there's a preference on it being three, isn't there? So
two or three. Otherwise, after a few months or a year, he will start looking for a partner, and it's difficult at that time. He will be at a critical stage. I'd love to see that a number of people are aligned from the beginning to take that. We look at the founder, we look at their credentials, we look at how realistic they are. We understand how their credentials and their abilities. We assess the founder. We look at the founder because this founder is going to be your biggest bet.
It's like a vibe check. You need a vibe check.
The idea can change. The idea, they can always change their way. They will always change the way forward. But the founders, you will be stuck with them for a very long time. So you need to make sure they are your partners, and they are people you really want to support and the idea also is we spend a lot of time looking at the idea. I feel alerted when an idea is done for the first time. I would like to see this idea implemented somewhere else so I could measure it.
That contradicts what you said about, like, we want it to start here, we want to invent. How can we encourage inventors if VCs are...
When we talk about invention, we need to understand what is it that we are trying to invent. Are we trying to invent a new mineral that is lighter for the mobile phone? That is not something venture capitals will be investing in. This is high risk. This needs to be hugely subsidized by governments and large corporates. That is not what limited partners have signed up to. Limited partners have signed up for the investment in utilizing some sort of technology to solve a problem or to change the way something is happening, in order for money and returns to happen. And when someone comes in and there is something that is done for the first time, they come and say, we want to change the world by disrupting the way real estate is working, for example. You say, well, was it done somewhere else? No, then I'm not saying that we don't invest. I'm saying that we spend more time.
Due diligence.
We really need to analyze this very carefully because that's a big claim, and there is a very, very, very high risk. But when someone says there are 2 or 3 startups that happened in other countries across the globe, and we're doing this here now, then we will be able to compare this to something else, and we will be able to understand whether this will work here or not. And and that is how we look at the idea. And the last thing we look at when we look at a startup, we look at the price. There are some crazy valuations going on, and we tend to negotiate hard. And if something is really highly priced, then we skip for that time.
So what would your advice be to founders, or if I came to you with my review idea, property review idea, how would you advise them to get taken seriously? What do they need to do? The founder, the product or the service, and the deal. How do they get taken seriously in all 3?
Well, they have to believe in what they're doing greatly, and they have to be open to discussions. I get a lot of founders who are really tensed, and they don't take any kind of questioning or criticism. They take it personal. I would say they really need to take these questions very seriously, and they need to understand that this is the way that venture capitalists think and investors think, and they should take them seriously. They should learn. They should understand that any criticism is something that should be taken into consideration. I would say they need to learn from what's happening around them. They need not to be put down by somebody else doing the same idea. That's fine, as long as you already know that this is something where you can excel and put a lot of effort and make it work. My advice to founders is, if you believe this is something that you studied it very well and you're willing to put, and they need to know this is very, very hard work. There is nothing, it will take you years to be able to convert this into something interesting. And the making money out of, the idea is not to try and solve a problem. It is how do you make money out of solving this problem at the end of the day. I get founders who are technologists. They're passionate about changing the world through a nice idea. And then the moment you ask them, how is this going to make money? It's like wishful thinking only. There is nothing really serious about their ability to monetize this or be able to make money out of it. So I would advise them to become very realistic when it comes to the ability to convert this into something that makes money.
And what about the deal itself? How to be realistic on the deal terms?
Yeah, I think the valuations are like
like picking a number out of a
hat. They just think that, okay, this person came up with this valuation, so why not use the same valuation? And that is not really how the whole thing works. I would say they need to keep their equity in the business. Definitely they need to protect their equity. So they need to raise the money when they definitely need the money. They need to differentiate between raising debt to create working capital and raising money for the equity so they could build the technology or build the business itself. And they should be they should try as much as possible to show the value of their business and the multiplier of the relationship between the valuation they are asking and the revenue that they are expected to generate. Good VCs will spend very good time discussing the valuation. They will not agree to the numbers that are pitched.
And so that's what you're looking for. That's what the VCs are looking for. What are the LPs, the limited partners? What are they looking for? And how do you attract them?
They're looking, most of the LPs are looking for multiples of their money to be returned. They consider the venture capital investment as a high risk. They will compare it to, shall I put my money in a financial instrument in one of the banks and make 6, 7, 8, 9%, or give it to you to return 2, 3, 4 times the money in 5, 6, 7 years? And most of them are looking at that multiple. However, the venture capital industry gives the limited partners, and especially high net worth individuals, it gives them a wonderful opportunity to be exposed to the innovation and to the kind of technology innovation that is happening. And think about it. If you are a multi-hundred million very high net worth individual or corporate, one of the big families or one of the big owners of large businesses here in the region, you look at these technologies and you see that they're changing the world, and the valuations are reaching hundreds of millions and billions. You want to get into that. So what do? I'll tell you something. They will have one of 2 or 3 options. Option number 1 is that head of family, like that rich investor businessman, will call his CFO, call his CTO, maybe his IT director, and say, guys, well, what's happening? Why we are not into these things? Why we are not into this space? and then they may hire somebody to look for these things. That's not going to get them anywhere. They will not be able to find the right company. They will not. This is a whole system. They might set up a department and they call it investment department into something. Trust me, that is not also going to go far unless they will set up a whole department of
family office,
investors and due diligence and technologists and stuff like that. Still, that's not going to go out anywhere. Their only option is to find a venture capital company. And I would say a suitable one, because some are quite large and they will not be able to manage the deal flow. Choose a company that is capable of sharing the deal flow with you, so they could show you what is happening, meet you regularly, give you co-investment opportunities in deals that you like to get in, and at the same time allow you to be part of that innovation and part of that growth. So the venture capital solve a real problem as far as this is concerned, and limited partners should look at this as a real value. Some limited partners are institutional investors, like governments, and they are mandated. They have an impact investment agenda to encourage SMEs, etc. So they still expect profits and return, but they have another agenda that is kind of focused on the growth of the market in a certain direction, or motivating a certain industry, sustainability, etc. Whatever impact they try to generate on a national level.
People tend to think that it's a case of, I just have to get the VCs to believe in me and invest in me. But if your product is really good, or if your startup, if you have a fantastic idea, you might also find yourself in the situation where you're being approached by VCs, and then you have the choice whose money you want to take. And then it comes down to the VCs and the support that they're actually ready to give you in a particular niche that might benefit you over, and no different to Shark Tank and Dragon's Den.
Well, I can tell you something. Nowadays, the startups now know that when you find money, take it. It's not like 5-6 years ago where there is a lot of money around. Nowadays, it's very difficult to raise money in today's environment. The interest rates are high and the liquidity is a little bit low, and exits are difficult. So startups as well as venture capital firms find it difficult to run the business. I guarantee you that none of the startups are going to face the problem of too much money, but I don't know where to take it from.
Which one to take
No.
They are. I don't know if this happens, but it strikes me as an opportunity for the LPs to actually get involved in these startups, because at the moment they're very much anonymous. They just trust the VC to get on with it. But what if you can actually have access to some of these LPs to help accelerate your growth, because they're already successful people investing in high-risk startups. So.
No, you're absolutely right. There are a number of initiatives, and we're trying to approach something like this with our investments. We're trying to make sure that some of the limited partners, or those who are interested, will be able to have access to certain startups based on the industry they operate in.
Right.
So let's say one of my limited partners will be a retail family, for example. They would say, we would like to get in, we would like to put a ticket with you to invest with you, but at the same time, we're interested in opportunities along these areas. Please give us a chance to look at them whenever there is a co-investment opportunity, or whenever the opportunity is there. And we will be, of course, happy to share that and to look at it. Of course, there are certain rules and regulations that control that, because you have to treat your LPs equally, and there are certain regulations around that. But of course, these things can be discussed always.
Okay. All right. So away from PropTech, away from VC space and investment space, let's take it back to the majority of my audience, which are real estate agents, agency owners, brokers, and professionals. As a serial real estate investor yourself, what would your advice be to them? What are your golden nuggets for the audience?
Well, I'll tell you something. Let me share with you this personal thing. When the first time I ever bought a real estate was when I made the first bonus in one of the companies I worked in. At that time, I had a manager who came to me and said it was a little bit less than $100,000, and he came and told me, that's like 20 years ago. He said, "Amjad, what are you doing with the money?" His name was Tariq Abdat. He's still a very close friend of mine. I said, "What are you doing with the money?" I said, "Probably I'll buy a car." And he said, "Amjad, go to your home country and drive 10-15 minutes outside the city, find a piece of land on the way to the airport, to the university or wherever, and buy yourself a piece of land."
Smart guy.
And I actually still bought the car, took the remaining money, and did exactly what he told me. And I still have that piece of land until now, and it's 20 times higher in price in 20 years. So, and I have done this to a lot of the employees who worked with me. Whenever they ask for a bonus or they ask for a salary increase, I'll give them a lump sum amount, and I will encourage them to go to their home country and buy something. And they will always come back and say, "Thank you." And I was listening actually to one of your guests, the legendary Allsop Lewis. And he said something along these lines. He said, most of the money people don't make it from the business. They make it on the back of the real estate. They invest, and that's absolutely the case. You look at most of the wealthy people, most of the wealth that is accumulated. It did not happen.
It's not through employment.
It didn't happen through employment. It didn't happen because the core business has grown to that level. It happened because the core business has given you the cash flow, and you took that cash flow and invested it in real estate. So real estate, I would say to the audience and to the young entrepreneurs and to the brokers and agents, and real estate is an incredibly important industry. Nothing will be as equally rewarding if so you need to pay a lot of attention to it. Grab the opportunity when you see it. Always believe in it. You and I were talking before we start. Stay positive. Pessimism wouldn't take anyone anywhere. We need to be positive. Listen less to
the news,
negative news, because I know businessmen who do not listen to news. Like news distracts you. It's like you have no control over it. You have no control over what's happening, and you end up making decisions based on things you do not control and you do not have an influence in. Try as much as possible to be optimistic. Go for something that your heart, that your guts tell you this is the right thing to do, and try to do your work based on like the best of your knowledge, to the hardest possible work, to the hardest you can. And by the way, technology is affecting real estate in a different way. The technology advancements are changing the way we look at cities. Why do we live in cities? Like 10,000 years ago, when this agricultural revolution happened and communities started developing, and cities were actually created and grown to allow people to interact with each other within proximity, and allowing their governments to be able to deal with them, give them announcements, and all of that. So the basic need of why a city is created in human history is no longer at the same value. Today, you don't need to be next to someone to make business with him. Governments are already using electronic channels. It's like, so cities now need to reinvent the way they present themselves to the people who live in the cities. And Dubai, we were talking about Dubai. Dubai did that extremely smartly, because the city needs to become a nice place to be in, an interesting, a very convenient place, the ease of living, the lifestyle, the well-being. if the city does not really answer to all of these, if it's crowded, if the traffic is not good, if it's polluted, if it's hard to move from one place to another or hard to do some government action, your connection to the city is no longer mandatory. You can actually leave that city and go somewhere else.
Right.
So today we are living in an era where the technology advancements are making your attachment to the city different. You will go to the city that makes you happier, not to the city that you have to live in. I can go to any city. I can go to live anywhere. If that city doesn't answer, and that's why we have an influx of people coming into Dubai now. They visit it once, they can leave. They can come and move their business here because the attachment is no longer very strong between the location or the place or the physical place and the business or the kind of work that you do. And that's a big change on how real estate markets are going to change from a completely different angle. Not talking about real estate business, but talking about the city itself and what it caters for.
Another invention, but maybe I've just stolen this from someone else, but there is that kind of nomadic lifestyle happening. And there is space for fractionalization of maybe rental property, like where you live, because there's a lot of people would, not want to live in Dubai for the summer, but they will go to Europe for the 6 months and then Dubai for 6 months. And, but I've got a rental, I've got a property, there's room here for...
I think you watched that movie. What's the name of this movie? When there is the lady who switched the house with another lady?
It's a Christmas movie. The Holiday. Yes. Yeah. Exactly that. There's an opportunity for house swapping or nomad swapping.
Yeah, well.
Gosh. Maybe we should keep this bit out of, maybe it's like a maybe this is the next unicorn and I've just given it away on the show. Thank you very much, Amjad. It's been a very forward-thinking discussion.
Thank you.
And thank you for joining me.
Thank you.
Hope you enjoyed that episode. If you did, like, share, and subscribe. Thank you.